posted a slightly weakish set of numbers. In fact, in the quarter 3, results were impacted by sale of the India data center as well as a hit on payments business due to the demonetization impact. Well, we have with us Ms. Pratibha Advani, the CFO of Tata Communications, who joins us on the phone line. Hi, Ms. Advani. Thanks so much for joining in. Always a pleasure talking to you. Well, talking about your business, can you tell us about how the core business has been performing in terms of the data business? A lot of one-offs have dragged the reported business.
Our data business continues to display robust and steady performance. While the revenue is showing a degrowth, but if we normalize this for one-offs, then our Q-on-Q normalized revenue would be a 2.3% sequential Q-on-Q growth, while the year-to-date data revenue growth would be 12.5%. And this growth is coming on the back of our traditional services portfolio, which has been growing by 5-6% year-on-year, and our new growth services. That has been expanding well, and this quarter, Y-on-Y, it has grown by 19%. We are seeing robust EBITDA margins in this business, and our normalized data EBITDA margins are 23.3%. So they've actually expanded this quarter if we normalize them by 60 basis points. Again, our traditional services contribute to almost 30-31% EBITDA margins.
Well, Ms. Advani, there's been some pressure on your voice margins. If you just take a look at it, it's dropped around 150 basis points at around 5.1%. Are there any one-offs?
No, there's no element of one-off. Voice is a business that we have been seeing on the decline. We are seeing both volume as well as margin pressure. And this is something that we've been expecting. And our entire focus for growth is really coming from the data business.
Well, Ms. Advani, let me just scratch that point a little more. Now, in the last con call, you had spoken of an annual EBITDA of around $65 to around $70 million. That's for your voice business. Do you maintain it?
It will be slightly lower, but voice will continue to generate free cash flows of 50-odd million for us. So it is important in our portfolio from a free cash flow perspective.
Okay, all right. Well, let's shift focus then. How much have you paid for the 35% stake in Telina?
We've paid euro 12.5 million.
All right, euro 12.5 million. All right. When is the Neotel final deal closure is expected?
Neotel approvals are in place, and we should be able to close before the end of current financial year.
All right, then once the Singapore data center stake as well as the Neotel deal is concluded, how much will your net debt decline from the current, I think, $1.2, $1.3 billion?
We expect our net debt to be at these levels. We are comfortable with this level. Our net debt this quarter has already come down by over $300 million. I mean, these are the levels that we'd be comfortable with. We do want to invest back into our business for growth.
All right. Thanks so much, Ms. Advani, for joining in and giving us all